Well, folks, 2022 has arguably been the craziest year in crypto so far. Large altcoins going to zero, crypto companies going bankrupt, and nine-figure hacks are just a few of the headlines many of us would love to forget. The unprecedented series of events we've seen over the last few months alone has almost everyone wondering what 2023 has in store and whether it will be bullish or bearish for the crypto market. So today I'm going to give you my top 10 cryptocurrency predictions for 2023, explain why they're likely to occur, and tell you exactly how they could affect the crypto market. This is a video you cannot miss. Okay, let's get straight into it. My first crypto prediction for 2023 is that the crypto market will start to recover. Now, to be clear, I'm not saying the crypto bull market will come back. However, I am quite confident that the worst of the crypto bear market will be behind us by the end of next year. If you watched our recent video on when the crypto bear market could end and how low it could go, you'll know that the bottom will likely come sometime in the first quarter of next year, that the bottom for BTC could be 10k or slightly lower, and that most altcoins could therefore fall by another 60 to 80%. The main reason why the crypto bear market could bottom in the first quarter next year is because this is when the Federal Reserve is expected to stop raising interest rates. Now, it's important to note that stopping is not the same as lowering, but it will likely be enough to prevent crypto from crashing further. The main reason why the bottom for BTC could be 10k or slightly lower is because the stock market has yet to find its bottom, and the crypto market is highly correlated to the stock market. The stock market is expected to drop by another 20 to 30%, which would translate to a 40 to 60% drop in BTC's price. Now, it's important to stress that BTC could flash crash lower than 10k. I suspect this would be due to a crypto-specific factor, such as a Bitcoin mining ban due to energy shortages, Mt. Gox creditors selling the BTC they'll start receiving in January, and, of course, a deadly combination of liquidations and low liquidity. If recent events didn't make it clear enough, it is absolutely imperative that you keep any crypto you're not actively trading on your own personal crypto wallet as we approach the true bear market lows. You can check out my deals page using the link in the description to get discounts on the best ones. My second crypto prediction for 2023 is that the Securities and Exchange Commission, or SEC, will crack down on another big crypto project or company. Knowing how horrible this year has been, I wouldn't be surprised if it happened between the time I shoot this video and the time you see it. Let's hope not. In any case, another crackdown seems extremely likely so long as Gary Gensler continues to be the chairman of the SEC. Gary's term won't expire until 2026, so there's lots of time for him to do damage. This assumes that he won't be expelled from the SEC for his close encounters with Sam Bankman-Fried. More about that in the description. Moving on. Now, if you've been keeping up with our SEC updates, you'll know that the criteria the regulator has been using to crack down on cryptocurrency haven't been entirely clear. These opaque criteria can be summed up as a subjective interpretation of the fourth part of the Howey test. To recap, the Howey test is used to assess whether an asset is a security, such as a stock in a company, that requires additional regulation from the SEC. The fourth part of the Howey test is the most relevant to crypto. Can you identify a third party that is creating an expectation of profit for a coin or token? The harsh reality is that the answer is yes for most cryptocurrencies, including some of the largest altcoins. I dare not name any names, but it's somewhat irrelevant because Gary has made it clear that no cryptocurrency is safe besides BTC. He's even targeted stablecoins, which makes no sense. Now, what this means is that every cryptocurrency besides BTC is a potential target. Because almost every single crypto exchange and platform offers cryptocurrencies other than BTC, this logically means that they are all potential targets too. So, a first quarter crackdown could be a catalyst for crypto lows. Now, my third crypto prediction for 2023 is that there will be lots of crypto regulations. Now, most of these regulations will probably be very good, but a few will probably be very bad. Also, it's very likely that crypto regulations will vary from region to region, despite attempts to create global crypto rules. If you watched our video about the European Union's Markets in Crypto Assets, or MiCA, you'll know that the finalized regulations will be released sometime early next year. Although they won't be coming into force for another 1 to 2 years after that, they will give institutional investors regulatory clarity for crypto. In case you missed the memo, the absence of regulatory clarity is the primary reason why institutions have been hesitant to invest in crypto, especially altcoins. The establishment of regulatory clarity in the EU and elsewhere could therefore result in lots of inflows and contribute to a Q1 recovery for crypto. More importantly, crypto regulations will effectively force crypto projects to decentralize. This is because the only way to avoid many of these regulations will be to be decentralized from top to bottom. You can find out what that means by checking out our video using the link in the description. Anyways, I'll reiterate that some of these crypto regulations are likely to be very bad. The worst regulations are likely to be in relation to things like payments, DeFi, and privacy, possibly even self-custody. That's because all of these niches are a threat to the traditional financial system. The thing is that the crypto industry is likely to significantly grow thanks to good regulations. With some luck, this increase in adoption and capital will make it possible for the crypto industry to lobby to remove the bad regulations. Consider that powerful individuals and institutions want privacy the most. My fourth crypto prediction for 2023 is that DeFi will go mainstream. This will be due to a combination of better front ends, regulatory clarity increasing liquidity, proof of resiliency from some DeFi protocols, which will increase trust in DeFi, and a decline in trust of centralized entities in the crypto industry. The caveat is that bad crypto regulations could slow the adoption of DeFi. So far, however, it looks like DeFi has been left out of most crypto regulations so long as the protocols are truly decentralized. Thankfully, most of the largest DeFi protocols are in fact truly decentralized, notably those on Ethereum. Most of the largest DeFi protocols on Ethereum have also been tested by institutions in permissioned environments, namely Aave. This is very interesting because DeFi is technically a direct competitor to the traditional financial system, as it makes it possible to trade, borrow, lend, and save. Call me crazy, but I think the institutional adoption of DeFi is inevitable. This is because many institutions have acknowledged that the advent of new technologies such as blockchain means there will be a race to the bottom in terms of transaction fees and settlement times. I'll never forget what SEC Chairman Gary Gensler said in his cryptocurrency course, which you can find here on YouTube. The goal of entities in the traditional financial system is to extract rents, charge fees wherever they can. This begs the question of what they will do now that this model is falling apart. Well, the answer is that they will start buying smart contract cryptocurrencies with proof-of-stake consensus mechanisms to ensure they maintain control of these new payment networks and continue to extract rents. This hasn't happened yet, but could start soon now that asset managers are getting involved. Food for thought. My fifth crypto prediction for 2023 relates to the third, and that's that crypto payments will become more common. This will again be due to a combination of better front ends, regulatory clarity increasing liquidity, and most importantly, an increase in scalability that finally makes crypto payments feasible. This prediction comes from a series of headlines I saw over the summer about Ethereum founder Vitalik Buterin saying how Layer 2s on Ethereum will power crypto payments. This makes sense given that Ethereum is the most secure base layer to have for a payment system besides Bitcoin. Moreover, developers will be implementing Ethereum Improvement Proposal, or EIP, number 4844 sometime next summer. For those unfamiliar, EIP 4844 will increase the scalability of Layer 2s on Ethereum by between 10 and 100x. Given that most Layer 2s already process thousands of TPS, such an increase will put them on a par with Visa. If that didn't make it clear enough, it's very likely that Layer 2s on Ethereum will be ground zero for crypto payments once EIP 4844 is implemented. Now, this doesn't mean that other smart contract cryptocurrencies won't play a role, but it's more than likely they'll have to find their own niches. The catch is that an increase in crypto payments could lead to more regulatory scrutiny. My greatest fear is that regulators will eventually require you to complete KYC if you want to use stablecoins on a smart contract cryptocurrency like Ethereum. This has been mentioned by a few regulators already. The scariest part about this possibility is that it would be easy to implement since the largest stablecoins are centrally controlled. The silver lining is that a KYC crackdown on payments would drive innovation in the decentralized stablecoin niche, and it looks like some DeFi protocols are ahead of the curve, so to speak. My sixth crypto prediction for 2023 is that the number of crypto holders will increase significantly. For context, crypto adoption currently stands at around 4% of the global population. This isn't much, but the growth has been exponential, and there are many reasons why this trend will continue next year. For starters, lots of platforms have been integrating crypto features. Most notable are Facebook and Instagram, which have been testing NFTs on multiple smart contract cryptocurrencies. Even Starbucks has been working on NFT loyalty and member programs on Polygon. Not only that, but free speech-focused social media platforms like Telegram and Signal have been integrating crypto features with Toncoin and MobileCoin, respectively. All these companies have billions of users combined. Even just a small percentage of crypto adoption by their users would be significant. Now, if you watched our video about DappRadar's report on GameFi and metaverse niches, you'll know that there are 3 reasons why people adopt crypto. Because of speculation, aka profit, because of necessity, and just for fun. Obviously, there isn't going to be too much speculative adoption in 2023. This leaves out of necessity and just for fun. While most of the crypto adoption next year is likely to be driven by just for fun factors such as those I just mentioned, there could be a surge in necessity-related crypto adoption. This is simply because many countries are on the brink of collapse due to economic, social, and/or political issues. We've already seen a few of them fall, such as Sri Lanka. When financial systems fail, cash and crypto will be the only options, especially as foreign currencies fall against the US dollar. If we're being honest though, given the state of modern society, crypto adoption will probably take off because of a viral TikTok video. So, let's just hope it's one of mine. Now, my 7th crypto prediction for 2023 ties into the 5th, and that's that at least one additional country will adopt BTC as legal tender. Tonga is at the top of the list here, since the island nation announced that it will be making BTC legal tender sometime in 2023 and begin mining BTC with volcanoes. Now, if you watched our video about the countries that are most likely to adopt crypto, you'll know that the predications for this are a lack of financial infrastructure, a reliance on remittance payments, and the use of a foreign currency whose monetary policy cannot be controlled, such as the US dollar. These reasons are essentially why El Salvador adopted BTC as legal tender in September last year. It's also why some Latin American countries are the most likely to follow suit. It's even why the Central African Republic adopted BTC as legal tender earlier this year. It uses the Central African CFA franc. Look it up. Now, to clarify, adopting BTC as legal tender doesn't mean that the countries in question will ditch their national currencies. It's more than likely they'll continue to use their national currencies alongside BTC, assuming there isn't a total collapse of the financial system, that is. It's also possible that some countries will adopt cryptocurrency alongside a new central bank digital currency, or CBDC. Now, this seems unlikely given that the two digital currencies are diametrically opposed, but it's something that has been hinted at in various reports, including one from Harvard. More about that in the description. Anyhow, if my first prediction about the crypto market beginning to recover by the end of next year is correct, then it's quite likely we will see another country adopt BTC as legal tender. This is just because they will see, along with everyone who's been paying attention, that another crypto cycle is starting. My eighth crypto prediction for 2023 ties into the previous two, and that's that big tech companies will continue to announce crypto integrations. Like the countries that could adopt BTC, big tech giants are ultimately adopting crypto because they're losing money and are trying to find ways to plug the hole. Some of you may recall that tech giants like Apple and Amazon were hiring for crypto-related positions over the last couple of years or so. Now, we've yet to see any meaningful crypto developments from them or the other big tech companies with similar job openings, but those could all come sometime next year. Twitter is at the top of the list here because owner Elon Musk has made it clear that he intends to integrate crypto features on the platform. Right now, he seems to be in the process of balancing free speech and censorship in the face of government scrutiny. However, the crypto aspects could come in 2023. Regardless, it's clear that this is the direction that big tech is moving. The aforementioned crypto adoption by Facebook, Instagram, and others will almost certainly inspire the rest of big tech to do the same. On that note, it's possible that big tech adoption of crypto could be related to the metaverse. This is because literally nobody is a fan of the centralized metaverses that big tech companies like Meta have created. They know that they're nothing more than a means of extracting even more data that will be sold to advertisers and shared with governments that are obsessed with surveillance and censorship. This is why I think Meta and others will eventually understand that the only way they can make money on this new technology is to integrate with decentralized alternatives that already exist. Big tech's role will likely involve providing hardware and access points that enhance user experience. My ninth crypto prediction for 2023 is that the wolves on Wall Street will acquire at least one blue chip crypto company. This prediction is highly likely to come true, given that Goldman Sachs and others are interested in buying up a few subsidiaries of FTX that remain solvent. It's not just FTX either. There are lots of other crypto exchanges and platforms that have gone bankrupt over the last year. Celsius, BlockFi, and Voyager Digital are easy examples, and it's possible, if not likely, that some of their business assets will be acquired by a TradFi institution looking to offer crypto services. There's even speculation that Coinbase could be acquired by a megabank like JP Morgan. As Messari CEO Ryan Selkis pointed out, this is unlikely to happen given Coinbase CEO Brian Armstrong's controlling shares in the company, but it's still within the realms of possibility. This is because the potential collapse of troubled crypto companies in the United States, like Digital Currency Group, Grayscale, and Genesis Trading, could have knock-on effects for Coinbase. Coinbase is also involved with USDC issuer Circle, which posted a surprisingly small profit in Q3 this year. As a cherry on top, both Coinbase and Circle are in the crosshairs of the SEC. Regulatory action against one or both companies could cause Coinbase's stock to collapse even further than it already has. If Coinbase stock goes low enough, there's a scenario wherein a takeover of some kind could occur. After all, Coinbase is the largest cryptocurrency exchange in the US, and the big banks on Wall Street have been watching billions of dollars flow from their accounts onto the exchange over the last 2 years. They've also seen how much money Coinbase can make, and probably also how much data it can gather. My 10th crypto prediction for 2023 is that BTC will start being used for international trade. It's possible that some countries, such as Iran, are using BTC for this already. Iran has not yet confirmed whether it's using BTC, however, there are other countries that have signalled their interest. Naturally, most of the countries that are interested in using BTC for international trade are those that have faced sanctions or scrutiny from the United States and its allies. This list was once restricted to a few rogue actors, but it's quickly expanding as we enter a so-called multipolar world. At one pole, we have the United States and its allies, and at the other pole, we have the BRICS, Brazil, Russia, India, China, and South Africa, plus their allies. As some of you might have seen, the BRICS are reportedly working on their own reserve currency, which will be a combination of their existing currencies. Now, this sounds intimidating on paper, but in practice, the tensions between some BRICS members are high, and there are likely to be disputes about what proportion of which currencies will back their reserve currency. It's also possible that other significant countries like Saudi Arabia will join the mix. Speaking of which, Saudi Arabia looks like it will be legalizing cryptocurrency sometime next year. Hong Kong will also be easing crypto restrictions, and Russia appears to be working on crypto legislation. This apparent crypto adoption by the BRICS could see them add BTC to their reserve currency basket. Now, considering the track records of some of these countries, you might be inclined to say that's a bad thing. Well, to that I say, remember that some of the first people to adopt BTC weren't all that appetizing either. Once it becomes clear that BTC is a viable option, naughty nations won't be the only ones adopting it, however. When that tipping point occurs, we'll see what Fidelity has called Bitcoin's, quote, very high-stakes game theory, wherein countries will rapidly adopt BTC. At that point, I predict that countries will start mining BTC to ensure the Bitcoin blockchain remains credibly neutral. But that, folks, is a prediction for another year.